could cause some real issues in the housing market, forcing homeowners and builders to make some pretty difficult decisions.
Buying property is considered by some to be the pinnacle of the American dream, but it's the things that make a house a home, like home appliances, that have builder confidence at a 7-month low.
Mortgage rates. Well, the 10-year yield is down considerably, so mortgage rates should be lower as well. And Diana Olick, are they down enough for it to really make a difference?
There's one real estate analyst who says the housing market looks a lot like it did in 2008. Ouch. At least for home builders, that is.
The Trump administration's high tariffs have dropped a bombshell on the American real estate market. On the one hand, there is talk of a wave of cancellations in luxury villa purchases. On the other, new construction projects are being crushed under the cost burden. Moreover, with interest rates at multi-year highs, millions of potential home buyers find themselves in the dilemma of whether to take out a mortgage with higher interest rates or wait until prices fall. In some real estate offices, houses are getting more and more expensive, but the number of houses for sale is already scarce. Where will this lead? Voices are raised. In the midst of the tariff storm, even the sometimes overlooked luxury segment has begun to falter. According to mainstream media reports, million-dollar housing deals are being cancelled one after another. Let's look at it from the beginning. US President Donald Trump's new tariffs, which could reach almost 145%, are the most controversial move that has been pulling the pin on the economic turmoil. The White House announced on Tuesday night that we are imposing additional sanctions in response to China's recent export restrictions, a decision that has deeply affected both the housing and construction industries. While an average of 8% of the building materials used in construction are imported, this value is over 50% in luxury housing. In smart housing, the average is 45%. Steel, aluminum, wood, cement components, marble, sanitary ware, furniture, and other decorative elements. They all share in this tariff storm. The cost jump often means an additional burden of tens of thousands of dollars. Tariffs will increase the cost of building the average house by as much as $10,000, says Steve Hanke, professor of applied economics at Johns Hopkins University. $10,000 may not seem like a lot, but in a market with a housing shortage in a sector where margins are already tight, this increase can create critical pressure. And it doesn't end there. The ensuing turmoil is also triggering mortgage rates. While the average interest rate in 2020 was around 2.5 or 3%, today we're talking about 6.7% for a 30-year mortgage. In the European Union, the 30-year rate is now around 3.25%. So American buyers are right to ask, why are we paying so high? The risk of tariff-induced inflation is distorting investor sentiment. And with the bond market on tenterhooks, mortgage rates continue to move upward. According to experts in the sector, this picture is challenging both new home buyers and existing homeowners. Millions of homeowners who have mortgages with interest rates below 5% say, let's wait, maybe the markets will improve, since they will have to pay new loans with higher interest rates if they sell. There is a deepening sense of deadlock. While demand for housing still outstrips supply, many people are putting their homes up for sale because of the perceived or feared impact of Trump's trade war. The contradiction is in the sentence, houses are going to get expensive, let's sell them now. While others are saying, I can't bear the high mortgage interest even if I buy a new house, let's stay where I am. What happens is that the market, already struggling with limited inventory and sky-high home prices, becomes even tighter. George Carrillo, CEO of the Hispanic Construction Council, HCC, points out increasing construction costs and tariffs directly leads to higher home prices. For example, the 2018 tariffs imposed a 25% tariff on steel and a 10% tariff on aluminum, which raised material costs by 10 to 15% and added nearly $1 billion to construction costs in just 1 year. At the same time, institutional investors, large families, entrepreneurs, and contractors were all asking each other who will bear this additional cost. Recently, small construction businesses that are experiencing financial difficulties may go bankrupt. Such a blow to the construction industry, 80% of which is made up of small businesses, could trigger the loss of tens of thousands of jobs. To repeat, the customs duty is not a flat item, it adds a new burden at every stage. People trying to rebuild their homes, especially in areas devastated by natural disasters, are suffering greatly from the tariffs as the cost of materials increases. The wildfire-ravaged Los Angeles area is in desperate need of rebuilding right now, But the tariffs are tightening the supply of building materials and driving up the price, says economist Weingarten. That means people's insurance payments may fall short and they may struggle to find additional cash. My budget to rebuild my house was $300,000. Now it's $330,000. Where will that $30,000 come from? Some families ask. On the other hand, the luxury segment is also in turmoil. The Wall Street Journal, with the headline, "Wealthy Buyers Pull Out of Million-Dollar Home Deals," reports that the number of cancelled contracts on properties worth $5 to $10 million is on the rise. A 0.51% interest rate fluctuation may not have much impact, but the uncertainty in the US feeds the question of, will there be a loss of value for these people? The increase in exchange rates, the explosion of construction costs, the increase in imported luxury building materials due to tariffs, all these make people say, enough. Let me stay away from the market. With foreign buyers also pulling back, even millionaires' vacation homes are struggling to find buyers. Naturally, the news that Canadians are liquidating their American vacation homes seems to be an outward reflection of this tension. According to media reports, Canadians who bought a lot of houses in states such as Florida and Arizona until 2023 are withdrawing because of rising mortgage interest rates and escalating tariffs, saying now is the time, let's sell. This raises the question of, where will the wave of cancellations and the increase in foreign sellers take prices in the luxury segment of the market? Analysts say it is difficult to make predictions in such a complex equation. Danielle Hale, chief economist at Reuters, summarizes the situation by saying if Trump does not back down once again and fully implements the announced tariffs, it could undermine growth, reduce incomes, and shrink the purchasing power of home buyers. Home buyers face higher interest payments and increased construction costs. This affects not only new housing projects but also the second-hand market. This creates an atmosphere where builders are asking, is it worth the investment? And buyers are asking, interest rates are too high. Should we wait? Indeed, according to figures from the National Association of Home Builders, the housing sector represents about 16% of the US gross domestic product, not an insignificant share. A recession in one sector can have major repercussions for the entire economy. Platforms such as MarketWatch and Yahoo Finance, under the headline How Trump Tariffs Could Affect the Housing Market, have expressed similar concerns. If construction stalls, unemployment will rise, unemployment will lead to lower consumer confidence, and even if mortgage rates fall, people will have no income, so home buying will not pick up. In the short term, there are those who expect falling prices, but experts warn that falling house prices could erode the wealth of millions of homeowners, which could destabilize the market. So maybe some buyers will rejoice, oh, prices are coming down. But if general prosperity declines or a mortgage crisis erupts, everyone will suffer. There are also claims that Trump's tariffs, which he has billed as Independence Day tariffs, could cause unemployment in the US. Some manufacturing companies say if our supply chain in China is cut off, we'll have to cut production and lay off workers. This situation would shake the income security of those planning to buy a house, and banks would become rigid in giving mortgages. Then Trump may announce a list of exemptions and save items such as smartphones and laptops. But we do not see any clear easing steps for basic areas such as the construction sector. Material imports continue to be crushed under the tariff burden. As HCC CEO Carrillo put it, new home construction, already challenged by labour shortages and disrupted supply chains, faces an additional challenge from tariff-driven increases. This sentence is an unpleasant warning for those seeking to capture the American dream. In this spiral, existing homeowners prefer not to sell their homes, as they are worried that once I sell, I will pay 6 to 7% interest on the new house and spend my life with a mortgage. Thus, supply becomes even more scarce. Housing prices, especially in growing metropolitan areas, have tended to increase slightly or remain stagnant, let alone fall. The slowdown in sales is also worrying real estate agents. There used to be 5 or 6 buyers for every house we showed. Now there are maybe 3, but they have difficulty finding financing. There is a vicious circle. Adding to this picture, forest fires, floods, and hurricanes prevent the rapid renewal of the housing stock after natural disasters. Hundreds of thousands of people are forced to wait for reconstruction processes because construction material imports have become expensive. The resulting housing shortage is painful. There was already no place for low-income people to live. Now even the middle class is struggling to find housing, say urban planners. All eyes are on whether Trump will ease tariffs or whether Congress will come up with a law to stop the tariff war. If we look at the report card of the housing sector in recent weeks, the picture is as follows. Interest rates are around 6.7%. Home prices are still hovering near historic highs on a national average. Inventory is at record lows and construction input costs are skyrocketing. Considering that 8% of material imports come from China, it cannot be underestimated that steel and wood will become more expensive with tariffs. NAHB expects a 12% decline in new housing construction in 2025. This could lead to massive job losses with a multiplier effect for the sector. While the Trump administration says we're reining in China, home buyers are asking, why are we paying the price? If consumer confidence is shaken, even an interest rate cut may not be enough to revive the market. Worst of all, if people who lose their jobs or see their incomes decline are unable to pay their mortgages, analysts fear a 2008-like crisis and say, we hope it doesn't go that far. Against this backdrop, Canadian investors are cashing in on their vacation homes in Florida or California, creating an interesting flurry of activity in real estate offices. Some are selling luxury homes at high prices and returning, while others believe that, let's wait, prices will rise further. But Canadian banks like RBC warn, if uncertainty persists in the US market, the luxury market will slow down and the wave of cancellations will grow. Million-dollar homes don't always sell because they have a billionaire audience. Developments such as the Boeing crisis, the trade war, etc., have demonstrated that even the rich are cautious. The overall picture, Trump's tariffs are putting a strain on both new housing construction and the second-hand market. The US domestic market is shaken by interest rates are too high, we risk inflation, the supply chain is in disarray. On the Chinese side, retaliation continues. The price of imported parts skyrockets, and so does the final cost of the final product. Economists like Danielle Hale remind us that, in the long run, this could undermine economic growth, reduce investment returns, and shrink the purchasing power of home buyers. The Trump administration, which may find support for protectionism in the short term, will see the risk that this policy could backfire over time. It is unclear how long prices will be able to resist, but with mortgage rates high, there are those who say prices should at least fall. As experts say, if house prices fall, the wealth of millions of homeowners would be eroded and market stability could suffer. In short, every scenario leads to a dark path. To add insult to injury, builders shoulder additional burdens in every area from fuel costs to raw materials. Small contractors who import their materials are in danger of bankruptcy. In light of all these data, and considering that the housing sector represents 16% of the US gross domestic product, the notion of tariffs seems more like a mechanism that threatens people's right to housing than a simple diplomatic tension. People are desperate. I can't find an apartment, and if I do, I will pay astronomical interest, but will I be able to afford it? Moreover, those who plan to remain homeowners for a long time are worried. Who will take a mortgage with such high interest rates if I resell it in the future? Will my house lose value? Analysts say, this picture may last for a few years, but eventually a compromise, a new order will be found. However, the prevailing view is that Trump will not back down from the trade war in order to appear strong to his base. If China, in return, continues to lock down trade, saying we have retaliatory leverage, the home buying and selling market will become a kind of hostage. After all, building materials, electronics, steel, wood, even smart home technology are affected by tariffs. Of course, when new home sales stumble in the ecosystem, second-hand demand may increase, but there is a wall of mortgage interest there too. Uncertainty about employment and income is at least as effective as interest rates. What happens next? Some say that by the end of 2025, this harsh picture will soften relatively, and Trump's team will turn towards a policy of increasing the accessibility of housing for the middle class under electoral pressure. Others warn, although interest rates may fall, the course of inflation, world geopolitical tensions, and uncertainty will continue to be a headache. A frenzied buying spree by institutional investors is also driving up rents and keeping house prices stable or rising. This leaves individuals who want to become homeowners on the back burner. A complete knot. In short, the Trump tariffs are taking the housing sector by storm. From $1 million home deals to middle-income home sales, the tension is felt in every segment. Construction costs are climbing, mortgage interest rates are rising, inventory is limited, and the buyer's wallet is shrinking. Add to this people's fears of a tariff war-induced recession, and no one wants to make long-term commitments. Some may say, well, maybe housing prices will fall. But experts like economist McBride warn, falling prices erode the wealth of homeowners? Not a good thing. When the housing market is not functioning properly, employment and macroeconomic growth lose momentum. In the United States, policies based on the rhetoric of it's okay to engage in a trade war with China, the strong will win, may protect some domestic industries in the short term. But the consequences of putting so much pressure on a huge area like housing are severe. Rising construction costs, weakening consumer confidence, high interest rates, and limited supply all combine to make buying a house a luxury. Moreover, those who lost their homes in forest fires or want to rebuild after floods are rebelling, saying, "We are stuck in tariffs. We cannot find materials." What may seem like a secondary problem in the real estate market is in reality a very deep wound. To summarize, with one last paragraph, there is an all-out struggle on the trade war fronts. Boeing order cancellations, rare earth restrictions, retaliatory tariffs on agricultural products. Perhaps the least talked about, but the one that touches the lives of the most people, is the repercussions of the tariff wave on the housing market. The construction and real estate sector, which accounts for about 16% of economic growth, reminds us that tariffs are not a superficial dispute, but a complex challenge that directly threatens the right to housing for millions of people. From the ordinary home buyer to the luxury villa investor, from the contractor to the manufacturer, everyone could end up on the losing side in the arm wrestle between Trump and China. The only way out of this maelstrom may be through a tariff rollback or a global agreement, experts say. Otherwise, the American dream is likely to become a much more expensive and unattainable dream for hundreds of thousands of families.